For more insights, let's bring in Roger Ferguson, former Fed Vice Chairman and a CNBC contributor, and Sarah Malik, Chief Investment Officer at Nuveen. Good to see you both. Happy Friday. Roger, what have you been thinking about the past couple of weeks with an absence of a lot of data points?
Look, I've been thinking about the messages the Fed has been delivering and how the dual mandate is creating what I would describe as a dueling Fed. We had one Fed governor, Governor Myron, who's thinking more in terms of the so-called neutral rate and using that as an argument to reduce rates. But most of the other Fed officials seem very much to be where they were before, which is some open to the possibility of moving. It feels to me like most of them are in a very cautious stance. And the truth of the matter is, without data to break the tie, I think it's going to be a judgment call when they get to the next meeting. So it's really a wait and see with the Fed that's very much divided.
Roger, is it possible that both sides of the dual mandate are kind of, just not awful? I mean, is it possible that inflation's kind of grounded, and is it possible the labor market is in pretty good shape? And I mean, we do find things to worry about a lot.
We find things to worry about. Look, I think the most recent data are telling us that we have a low hire, low fire labor market that's pretty unusual, gradually weakening perhaps. We certainly see inflation that is, running above for the 2% target, probably at 3%. So I'd argue that it's possible that both sides of the dual mandate are somewhat disappointing, with neither one necessarily, winning the battle, so to speak. Yeah. I think that's the Fed's dilemma.
But, no one's talking about a misery index up in the double digits anytime soon. Sarah, what is this? If this is all true, what's an investor to do?
The wall of worry is definitely getting taller, and that's for 3 reasons. First, investors are concerned about AI spending, given the meta results we recently saw. Second is the pace of rate cuts. Is it going to be fast enough to please investors? And then third are these employment markets. That challenger data yesterday, the worst in 22 years. I think what investors need is one of 2 catalysts. First, we need the government to reopen so we can get some certainty around economic data, and then get a vision on whether we're going to get a rate cut again in December. And second, for tech stocks, which have been the main driver of these markets, NVIDIA reports earnings on November 19th. That could be the catalyst that revives tech stocks. Until we get one of those 2, I think markets are going to remain mixed and likely volatile to the downside.
Where are you on? I'll ask both. Is the Fed on track, Sarah, to cut again and then into next year as well, or was Jay Powell sort of signaling that that's not guaranteed?
Jay Powell was definitely conservative in his recent commentary, but I see 3 more rate cuts over the next 12 months. I don't know if we're going to get that in December because we just don't have enough inflation and employment data to determine that. But I think either way, we are going to get a gradual pace of rate cuts, because inflation, while it's not at the Fed's target, it is running in the about 3% sub range. So I think the inflation is manageable for the Fed, and that employment data is weakening. We're seeing that with claims driven by government layoffs, but also with the challenger data. I think the economy slowing with the employment markets is going to cause the Fed to cut 3 more times.
Does the Fed know what it's going to do at this point, Roger?
No, I think the Fed does not know what it's going to do. Each individual knows what he or she would do, but the consensus is right now hard to find. It's an evenly divided Fed. I hope that Sarah is right, that inflation comes down. I think most folks do, but I am not 100% confident in that at all. And it feels like the job market is somewhat easing, but not necessarily falling off a cliff. So, Sarah may well be right. I've known her for many, many years. She's very smart, very capable. I would not at this stage say 3 rate cuts are in the bag. I'd say it's incredibly uncertain. And I fear that the data, whatever it is not going to necessarily clarify this situation. It's going to be meeting to meeting, data dependent, and it's very much wait and see.
Roger, do your colleagues at the Fed talk to you about the successor to Jay Powell? Do you have any inside info, anyone who's got the inside track there? Do you have anyone you prefer? Are any of these questions going to be things that you actually answer or not?
Yeah, I'll answer all these questions.
All right.
Look, no, they don't talk to me about the likely successor. There's only one person who knows that answer, and for a while that person is President Trump. My bet is it's someone named Kevin. Is the way I'm reading the tea leaves, but I have no particular insight into that. And the Kevin I'm thinking of is probably Kevin Hassett, but we'll wait and see. And in fact,
Yeah,
I think my name may undercut anybody.
Yeah. I thought you were trying to double your odds with because there's two Kevins in the running. But you think Kevin Hassett. Are you following it,
So,
Sarah?
not because I've got deep insight. Go ahead.
No, Sarah, do you? It doesn't matter to you, does it? You just gotta look macro more, but maybe it does matter.
We are watching it closely, and that's one of the reasons why we think we will get 3 more rate cuts. We think whichever person takes that position likely will be somewhat dovish when it comes to rate cuts. I don't have an opinion on who will win. But another thing we're watching, though, is the consumer, just another area of potential weakness. We are seeing consumer companies report fairly weak earnings, and what they're saying is that the lower-end consumer is really struggling here, and they're trading down, and the higher-end consumer is really carrying this market. That's another concern, that narrowness of the markets, with just the Mag 7 basically leading or lagging, and then just one area, one segment of the consumer performing strongly. Sentiment is poor. All of that is worrying for the markets, but I will end on one good note. That's third quarter earnings. They are coming in at plus 10% year over year. So that is the one strong note that is keeping this economy chugging along. And I also wanted to say it's great to be on with Roger, too. As you know, Joe, he was our CEO of TIA for a very long time.